Hello YouTube, Salivate Metal here, and I have happened upon this article here which I thought was quite interesting. We've seen the precious metal prices rise in the last few days after the bombshell reporting that the FBI are starting to reinvestigate Hillary Clinton's emails. But is the reason for the prices rising based off of the markets? Well, there's an article here from Kitco in their commentary section that says that that admits that while the U.S. presidential election seems to be fueling market volatility, one trend forecaster basically says that it will continue to bode well for gold prices no matter who becomes president. I was of the mind that if Hillary Clinton becomes president, we will see prices stabilize for a while and eventually go up. But then that if Donald Trump becomes president, we will see the prices head up sooner rather than later because of the shakeup of the system and the unknown factor that Trump brings, that fear factor that drives the psychological edge in markets. So reading from this article here, we forecast multiple fear factors rattling equity markets long after the U.S. presidential elections, noted Gerald Salente, founder of the popular newsletter Trend Journal, in his latest post on Wednesday. Therefore, we maintain our forecast that when gold prices stabilize above the $1,400 per ounce mark, they will spike towards $2,000. Very interesting, very bullish on gold prices for sure. Gold futures have rallied above $1,300 an ounce on Wednesday. Since then, they've pulled back some as markets await the outcome of the Federal Open Market Committee meeting, which they had that did not raise the interest rate. Markets continue to anticipate the Fed to raise interest rates this year. The only other time will be December when they meet. Pricing at a 73% chance that the central bank will tighten at its December meeting. However, that has increased to over 80% now. And December COMEX gold futures were up 1.5% at 1307.60 an ounce. To Calente or Salente, central banking policies have failed, and the current environment is sluggish growth and continued easing gold prices are set to move higher. There's a general consensus that record low interest rate and massive central bank quantitative easing policies have failed to generate global growth, and their ability to impact future economic policy is doubtful. Thus, while volatility may subside following the election, trend lines for a deep market fall and sharp rise in gold prices are basically not on a fear index of emotions of who wins the White House, but rather indisputable market fundamentals. So that leads me back to a previous video where I talked about this situation is things like quantitative easing or markets or interest rate hikes or spikes or dips or what have you, whatever they choose to do, will as in time have no effect because the markets and the fear factor is such that the fundamentals outweigh whatever tools and whatever tricks they may try to move gold and silver in one way or the other. So post your thoughts below on this interesting outlook from this person here. And I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, comment, and subscribe.